Kenya government is exploring the possibility of listing KPC, the Kenya Pipeline Company, in the Nairobi Stock Exchange through an initial public offer. Now, KPC is a state-owned company, and the fact that the government is trying to privatize it through an IPO is when a company is trying to sell its shares to the public for the first time in the stock exchange market. So this is a game changer, because if this company is going to be listed there, it might be one of the companies in the energy industry that you might consider investing in. So what are the implications in case this move goes through? How does it look like for somebody who's planning to buy shares there, especially in this company? In this video, I'm going to be using an example of Safaricom and KenGen just to show you what happened in terms of the share price for these companies that have a similar case as KPC. Because you're going to notice that KenGen was once a state-owned company. Well, it is. It's just that now the government decided to sell its shares through an IPO, and it was listed in the NSE. Same for Safaricom. First of all, let me give you context of what KPC does, the Kenya Pipeline Company. It's 100% owned by the government. The main work is in constructing a refined oil pipeline system and transportation of petroleum products. When you think about the aviation fuels in the Moi International Airport, when you think about the Jomo Kenyatta International Airport, the aviation fuel, KPC is also in charge of oil and gas pipeline management, and also in the transportation of petroleum products from Nairobi to Nakuru, Kisumu, Eldoret, so across the country. It's a big company that is in charge of petroleum transportation. They build these pipelines and ensure that we have networks that support this system. That's a big company. That's why it's a big deal for this company to be listed there. Now, let's look at KenGen. Let's look at how it performed during its initial, or rather during its IPO back in 2006. May 2006, KenGen is listed in the Nairobi Securities Exchange market through an IPO. The share price then was 11.65, was the offer price. That was the IPO price, 11.65 shillings. By the end of the day, the price for the stock was 49 shillings. From 11.65 shillings to 49 shillings. Think about that. Just one trading day, the first trading day, the price of the stock has shot up from 11.65 to 49 shillings. In fact, during the day, there was a bid of up to 62 shillings. The same day, that's what we were talking about. You can see that the demand for that stock was very high. You can even think about the day trader who was trading then. You buy the stock initially when it's 11.65, then you trade throughout the day, and by the end of the day, it's 49 shillings. Think about that. After a year, that is post the IPO, I'm talking about December 2007. The other one was in November 2006, so a year and a half later. Guess what? The price of the stock was 27.50 shillings. 27.50 shillings. A year later, that is in 2007. You can see that within one trading day, we have the stock moving from 11.65 to 49 shillings. And a year later, the price has gone down to 27.5 shillings. In fact, listen to this. 50,000 small investors had sold their shares by 2007. And these investors had bought the stocks during the IPO offering. That's an interesting statistic. You can imagine we had investors who were very optimistic then and who are very eager to buy these stocks. Initially, they buy them, and a year later, when the price of the stock has gone down, 50,000 small investors decided to sell their shares. They were like, no more. We don't want to continue being investors in this stock. So what happened? What specifically happened in this case? You can see that there was a high price volatility, that is the increase in the price of the stock during the IPO process. And later on in the year, there was that price correction. The value of that stock went down. The price of that stock went down. So honestly, there were losers there. There were losers. Imagine, even think about that stockbroker who bought that share during the initial IPO process. when the price was 49 shillings, and they have to wait a year later, waiting for dividends, waiting for the price of the stock to go up, only for it to go down to 27.50 shillings. Why would you not want to sell your stocks? That's just an assumption. In this case, I'm just curious to know why these investors decided to sell their stocks. I'm even thinking about the infrastructure that was then. You just couldn't trade using your phone, like we can actually do now using mobile apps. So you can, I'm just thinking about the dynamic of this this process of buying and selling the shares back then. Now, like I said, there was that price correction where a year later the price was 27.50, and guess what? I just checked the stock price for KenGen on Friday 21st, which was the last trading day, and the price was 4.91 shillings. 4.91 shillings from 11.65 during the IPO to 49 shillings at the end of the day to 27.50 shillings a year later in 2007, and now the stock goes for 4 shillings and 91 cents. So if we were to draw a graph, it will be 11, then we go up to 49, 62, then we go down, very down. That is in 2025, the price of the stock is 4.91 shillings. That is KenGen. Now let's explore Safaricom, because I didn't know this, but apparently Safaricom is a state-owned company. It was owned by the Kenyan government and also Vodafone. 2008, Safaricom is listed in the Nairobi Stock Exchange market as an IPO, where the government is selling part of its shares to the members of public, to us. The initial price, the offer price then during the IPO was 5 shillings. The highest price on that day was 8 shillings. The closing price on that day, on that IPO day, was 7 shillings and 35 cents. So at least for this type of stock during the IPO, it didn't shoot up like KenGen. And what's interesting is that a year later, that is in 2009, mid-2009, the price of the Safaricom stock was 2.85 shillings. So from 5 shillings to 8 shillings, which was the highest price on that day, to 7 shillings and 35 cents. So we have 5, just a slight upward curve. Then we have 7.35. Then a year later, we have 2.85 shillings. It's the same trend that I've seen with KenGen, yeah, where we had the price go up. It shot up very fast. It went down. A year later, it was down. And right now, as of 21st February, the last trading day in the NSE, the price of Safaricom share is 18.75 shillings. This stock has behaved opposite to what KenGen, or to how KenGen behaved. At least now the price of Safaricom share is 8.75 shillings. Initially, it started with 8 shillings. So whoever bought the stocks then and still has the stocks now, or bought and sold the stocks during that period, depending on how smart they were, they made money. But again, there was a point where somebody made a loss, because you're going to see that in mid-2009, the stock went to 2.85 shillings. So it went down, at least it's now up. I would think of the technological advancements that we have now. In 2008, we didn't have M-Pesa. I don't think we had M-Pesa, or probably this technology was brewing. We didn't have the smartphone. Not everybody had access to internet. So I don't see why internet, some of these products that Safaricom has now that it didn't have then, could have been the reason why the stock didn't perform as better as KenGen. But now the fact that we have these technological advancements, now everybody has access to a phone. Now we have M-Pesa. Now we use the internet, unlike we used to do before. Actually, that's the reason why the price has gone up. The price for this stock went up, and for KenGen, the price is still low. That's just my explanation. What do you think? Now, let's relate this to KPC, the Kenya Pipeline Company. KPC is in the energy sector. It's in the same sector as KenGen. It's in the same sector as KPLC. Honestly, I can't predict, but I've just shown you how the market performed. That during an IPO, the price of the stock shoots up. So that's the day traders make money. And you've seen that from the behavior of these two stocks. A year later, the price of the stock had gone down. But fast forward, the price of the stock has gone up for Safaricom, but the price of KenGen has not gone up as it was initially. So there's that dynamic, and it's something to expect in any investment, and that's something to be expected in any stock investment. One thing is clear is that when you are investing in stocks, you can be the day trader, the person who makes money in the initial process, when there's that vibe, there's that enthusiasm to buy these stocks, because if KPC is listed in the NSE, it's going to be the same thing. There's going to be that vibe, that energy, that enthusiasm to buy the stock. And because the demand for the stock is high, it's going to drive the price up, because now everybody wants to buy the stock and people are buying and selling, buying and selling, and buy and selling. So you've seen that in the short term, within that time period, somebody can make a lot of money. But if you're thinking of long term and you're buying the stock then, next year, a year later, when the value of that stock has gone down, when the price of that stock has gone down, and you're going to sell your stock, you're going to make losses. So it's up to you as an investor to be able to foresee these things based on the examples that I have explained to you. Two things to look out for in terms of these IPOs. Think about one, expectations. People have that expectation that the value of this stock is going to go up. So during an IPO, the price will go up, but eventually the price is going to correct itself. Within a year, there's going to be that correction. The other thing to look out for is in terms of long-term growth and innovations. When you are investing in any stock, for example, let's put KPC into context here. Think about 20 years down the line. Think about, not even 20 years, let's talk about even 5 years down the line. What innovations do we see coming up in the energy sector, and to be specific, in the petroleum industry sector? Is there anything that might affect this company? That is, if you're thinking of long term on whether you're going to buy this stock. Because if you're not thinking of long term, you can think about short term, and short term is during the actual IPO trading period. You know, that initial time period. You're thinking of short term, how you're just going to make money. You're not thinking about long term. So if you're going to think about long term, you really have to be smart in terms of you buying stocks at KPC, because the dynamics are going to be different. Eventually the price will go down, and if you buy it at a higher price now, 1 year down the line, when you want to sell it, you might go at a loss. But that's just something to look out for. Now, why would the government of Kenya want to list KPC in the stock exchange market? For the same reason why other companies are listed on the NSE, to raise capital, to raise money. Remember, the government is selling its portion to the members of public. What do? You buy the stock in exchange and you give them money. So this money is going to be used in projects to expand the company. To be specific, I checked out KPC, and this is what they've been up to lately. So currently, KPC has been working on pumping stations in the Nairobi terminal and also in the Nakuru terminal. And they have constructed and equipped 2 pumps operating 1+1 mode. I don't know what that is, but you can see they are actively, that is in 2024 to now 2025, they are working on that project to set up pumping stations in Nairobi and also in Nakuru. And there's also that goal where they're planning to boost the fuel flow rate to the western region. Think of Kakamega, think of Busia, the western region. So they are building up a pumping station known as Ngema Pump Station. Another thing that KPC has been up to is that they are currently working on upgrading and expanding fiber network cables to 18 towns. You can see that they have quite a number of projects that they are working on, and plus others that I haven't listed here. But you can see how the energy sector is expanding, the projects that they are working on, and they need money for that. Yes, they can use money from our taxes. Remember, this is a state-owned entity. But what if they were able to involve the Kenyan citizens? What if they were able to involve the public? Let the public raise money. Let them be part of this project. The other benefit of listing a company in the stock exchange market, this applies to all companies, is for transparency and accountability. Think of it this way. This is a state-owned corporation. It's a state-owned company. Now, we as Kenyans are going to invest in this company, and this company is in the stock exchange markets. And we have the Capital Markets Authority, which overlooks the performance of a company that is listed in the stock exchange market, so that we as investors can be able to see any red flags happening in one of the companies that we've invested in. So now we're going to have the CMA, the Capital Markets Authority, involved in this company and foreseeing the performance of this company for us as investors. So we are now going to have more eyeballs in terms of transparency. How is this company performing? Where is our money going to? You can see that level of accountability. Is this company facing losses? Are there any red flags that we should know about? And it's going to keep this entity at its toes. Now, based on these two IPOs that we have analyzed for Safaricom and KenGen, what is certain is that if you're going to buy early and you're going to sell early, you're going to make a lot of money. Well, a lot depends, but you're going to make good money. I'm just curious, if KPC is going to be listed in the stock exchange market, are you going to invest in that company? Thanks for watching. Like this video and see you in the next one.